China is holding a gun to America's head. Not a real gun. Something far more dangerous. They are holding $761 billion in U.S. Treasury bonds. And according to multiple reports now emerging from Beijing, they are about to pull the trigger. I have been tracking financial markets for years. I have seen currency wars, trade wars, sanctions, and economic standoffs. But what I uncovered this week stopped me cold. Because this is not a trade dispute. This is not a tariff negotiation. This is the beginning of a full-scale financial war between the two largest economies on the planet, and silver is the weapon. Welcome to finance currency. If you are new here, you are about to see something that mainstream media refuses to cover. If you are already part of this community, you know I do not do hype. I do data. I do patterns. I do connections that nobody else is making. But before I dive in, I want to do something different today. When you are watching this video, I want you to tell me in the comments what time it is for you right now. What city are you watching from? And most importantly, what is your name? I want to personally see who my beautiful and amazing audience is. Where are you all from? When I read your comments, it gives me energy, so please pause right now and comment. Time, city, name. Now let me show you what China is planning. The Bank of China has reportedly confirmed that Chinese tech giants Tencent and Alibaba are preparing to dump their U.S. financial assets. Not reduce, not rebalance, dump. We are talking about two of the largest companies in the world, worth over $1 trillion combined, systematically selling American stocks and American bonds. And where is that money going? Silver. Let me say that again because I need every word to land. $2 trillion Chinese corporations are reportedly planning to sell their American financial holdings and redirect that capital into physical silver. This is not speculation from some random blog. This is coming from Chinese state banking sources. But that is just the beginning. The bigger story, the one that made me record this video at 2 a.m., is what the Chinese government itself is planning. According to the same reports, China intends to redirect $3 trillion of its foreign exchange reserves into silver by Q3 2026. $3 trillion. I want you to understand this number because most people hear it and their brain just skips over it. $3 trillion is more than the GDP of India. It is more than the GDP of the United Kingdom. It is more than the GDP of France. And China wants to put all of it into silver. The entire above-ground silver stock in the world, every bar, every coin, every ounce sitting in every vault on the planet, is worth approximately $150 to $200 billion at current prices. China is planning to deploy 15 to 20 times that amount. This is not investing, this is financial warfare. And I am going to show you exactly how the weapon works. Let me start with what China is holding right now. According to the U.S. Treasury Department's own data, China holds $761 billion in U.S. Treasury securities. As of the latest reporting period, they have actually been reducing this position quietly for years. In 2013, China held over $1.3 trillion. They have cut it nearly in half. But they are still America's second largest foreign creditor after Japan. Now here is what happens if China accelerates the selling. When you sell Treasury bonds, bond prices fall. When bond prices fall, yields rise. When yields rise, the U.S. government's borrowing costs increase. America is already running a $2 trillion annual deficit. Every single percentage point increase in yields costs the U.S. government tens of billions in additional interest payments. So China dumping bonds does not just hurt the bond market. It simultaneously increases America's debt burden at exactly the moment when America can least afford it. But wait, where does the money from those bond sales go? Silver. This is the genius of the strategy. One transaction accomplishes two objectives. Objective 1, weaken the U.S. dollar and increase America's borrowing costs. Objective 2, accumulate the strategic metal that China needs for solar panels, electronics, military applications, and industrial dominance. Buy silver. Hurt America. Strengthen your position. Weaken your rival. That is not a trade. That is a weapon. And the evidence that this is already happening is everywhere if you know where to look. Shanghai silver is trading at $102 per ounce, while international spot is at $88. That is a 14% premium. Chinese recyclers are paying $96 for scrap silver, more than the international spot price for pure metal. Why would anyone pay 14% more than they have to, unless they are desperate, unless they know something, unless this is the opening move of a much larger strategy? I have been connecting these dots for weeks, and I keep arriving at the same conclusion. China is not buying silver because they think the price will go up. China is buying silver because they are about to make the price go up. There is a massive difference between those two things. In the next part of this video, I am going to show you exactly how the bond dumping strategy works, what it means for the US dollar, and why silver is the perfect weapon for this war. But first, make sure you are subscribed to Finance Currency. Hit that notification bell because what I'm about to reveal is going to change how you see global finance forever. And remember, do not forget to comment time, city, name. I am waiting for you. Let me show you the weapon before I show you how it fires. The United States Treasury bond is considered the safest financial asset in the world. It is backed by the full faith and credit of the American government. Every central bank on earth holds them. Every pension fund owns them. Every insurance company needs them. And that is exactly what makes them so dangerous in the wrong hands. China understood this decades ago. When China was growing its economy in the 1990s and 2000s, they accumulated massive dollar reserves from their trade surplus with America. They needed somewhere to park that money. U.S. Treasuries were the obvious choice, safe, liquid, and dollar-denominated. But somewhere along the way, China realized they were not just parking money, they were building leverage. Here's how the math works. The U.S. government needs to borrow about $2 trillion per year just to cover its deficit. That means they need to issue $2 trillion in new Treasury bonds every year. For the market to absorb that much new supply, there needs to be strong demand from buyers. China has been one of those buyers for 25 years. What happens when China stops buying? Supply stays the same, demand drops, prices fall, yields rise. But here's where it gets dangerous. What happens when China does not just stop buying, but starts aggressively selling? Supply increases dramatically, demand cannot keep up, prices crash, yields spike, and spiking yields create a cascade effect that touches every corner of the American economy. Mortgage rates go up because they are tied to Treasury yields. Corporate borrowing costs increase. Stock market valuations get compressed because higher yields make bonds more attractive relative to equities. The U.S. government's interest payments explode, making the deficit even worse. One decision by China to sell their Treasury holdings could trigger a financial crisis in America without a single soldier crossing a border. That is the weapon. Now let me show you how it connects to silver. When China sells Treasury bonds, they receive U.S. dollars. But they do not want to hold dollars anymore. The whole point of the strategy is to reduce dollar exposure, so they need to convert those dollars into something else. Gold? They have already been doing that. China has bought over 2,500 tons of gold in the last 3 years. But gold has limitations. It is expensive, it is bulky, and the gold market is already dominated by central banks who watch every move. Silver is different. Silver is smaller. The entire market is worth maybe $200 billion, a fraction of the gold market. That means China can move the price with much smaller amounts of capital. Silver is industrial. China needs it for solar panels, semiconductors, 5G technology, electric vehicles, and military applications. Every ounce they buy serves double duty. It is both a financial asset and an industrial input. Silver is overlooked. While everyone watches gold, silver flies under the radar. China can accumulate massive positions before the West even notices. This is why the $3 trillion number makes strategic sense. It is too much money for the gold market to absorb without sending gold to $10,000. But silver's small market means that even a fraction of that money creates supply-demand imbalances that force the price dramatically higher. Let me give you specific data. In January 2024, China reclassified silver as a strategic material. This puts silver in the same category as rare earths, essential for national security. They simultaneously reduced export licenses from over 100 companies to just 44. Think about what this means. The world's second largest silver producer just announced they consider silver essential for national security, and they are going to restrict who can export it. This was not random. This was coordinated with the bond selling strategy. Step 1, reclassify silver as strategic. Step 2, restrict exports so domestic supply stays in China. Step 3, begin dumping U.S. bonds to generate dollars. Step 4, use those dollars to buy silver from every other country on earth. Step 5, watch as the reduced supply meets exploding Chinese demand. The price does not go up, the price goes vertical, and the country holding the silver names the terms. I talked to someone in fixed income markets about this scenario. He said if even $100 billion in Chinese-held treasuries got dumped in a short period, the bond market would feel it immediately. Rate markets would reprice, the Fed would face pressure, and the proceeds flowing into silver would create a demand shock that no commodity market is built to absorb. $100 billion. The reports say $3 trillion, even if that number is exaggerated by 90%, even if China only deploys $300 billion into silver, that is still 1.5 to 2 times the value of all existing above-ground silver. The math does not work at current prices. For the supply to meet the demand, prices have to rise to levels that sound insane today, but will look obvious in hindsight. This is why Shanghai is at $102. This is why Chinese recyclers are paying $96 for scrap. This is why export licenses dropped from 100 plus to 44. Every single action China has taken in the silver market over the last 6 months makes perfect sense when you understand the bond-to-silver pipeline. They are converting American debt into Chinese metal, and America cannot stop them. Because here is the ultimate irony. America needs China to keep buying treasuries. The U.S. government is addicted to deficit spending. They need foreign buyers to absorb their debt issuance. If China stops buying and starts selling, there is no mechanism to force them to continue. China has leverage, America has dependency, and silver is the exit strategy. If you have made it this far in the video, you are ahead of 99% of investors. Go to the comment section and tell me, do you think China will actually dump all their bonds? I read every single comment. Now let me show you the accumulation in real time. Because this is not a future plan, this is happening right now. Today. While most people are watching Netflix and checking Instagram, China is systematically hoarding every ounce of silver they can find. Let us start with the Shanghai Futures Exchange. As I record this video, silver on the SHFE is trading at $102 per ounce. The international spot price is $88. That is a $14 gap, a 14% premium. In normal markets, this gap would close within hours. Arbitrage traders would buy silver internationally at $88, ship it to China, and sell it at $102. Free money, easy trade. But the gap is not closing. It has been persisting for weeks, and in some moments it has been widening. That tells you something is broken in the normal flow of silver into China. Either there is not enough silver available internationally to meet Chinese demand, or China is buying so aggressively that they are absorbing everything before it can reach Shanghai. Both explanations point to the same conclusion: desperation. Now let me show you the corporate angle. The reports emerging from Chinese state banking sources indicate that Tencent and Alibaba, two of the largest tech companies in the world, are planning to liquidate their U.S. financial holdings and redirect that capital into silver. Let me put this in perspective. Tencent has a market cap of over $400 billion. They own stakes in hundreds of U.S. companies. They hold U.S. Treasury bonds in their corporate reserves. They have massive exposure to dollar-denominated assets. Alibaba is similar. Despite delisting concerns and regulatory pressures, they still maintain significant U.S. financial holdings. If these two companies alone begin converting their U.S. assets to silver, you are looking at potentially tens of billions of dollars entering a market worth $200 billion total. But it is not just Tencent and Alibaba. The report mentions that this is part of a coordinated strategy directed by the Chinese government. State-owned enterprises, sovereign wealth vehicles, insurance companies, pension funds, all being directed to reduce dollar exposure and increase commodity holdings. Silver is at the top of the list. Why silver specifically? I will give you 5 reasons, and each one is more important than the last. Reason 1, solar industry dominance. China controls 80% of the world's solar panel manufacturing. Every solar panel requires silver for its conductive paste. As the world transitions to renewable energy, silver demand for solar alone is projected to double by 2030. China is securing the input they need to dominate the industry they already control. Reason 2, electronics manufacturing. Every smartphone, every computer, every 5G device requires silver. China is the world's electronics factory. They produce more devices than any country on Earth. Securing silver means securing their manufacturing base. Reason 3, military applications. Silver is used in missiles, torpedoes, jet engines, and advanced weapon systems. China is rapidly expanding its military capabilities. They need silver for defense production. This is a national security issue. Reason 4, de-dollarization. China has been trying to reduce dependence on the US dollar for a decade. Holding dollars means holding assets that America can sanction, freeze, or devalue. Silver is neutral. It is physical. It cannot be sanctioned. Every ounce of silver China buys is one less dollar they are exposed to. Reason 5, price manipulation potential. If China controls a significant portion of the world's silver supply, they effectively control the price. They can release silver to tank prices when they want to hurt Western miners. They can withhold silver to spike prices when they want to pressure industries that depend on it. Control the supply, control the market. This is the same playbook China used with rare earths. In 2010, China controlled 97% of rare earth production. When they got into a dispute with Japan, they simply stopped exporting rare earths. Japan's electronics industry was brought to its knees within months. Silver is the new rare earth. Let me show you the export restriction data. In January 2024, China reduced silver export licenses from over 100 companies to just 44. That is a 56% reduction in the number of entities allowed to export silver from China. The official explanation was quality control. The real explanation is supply control. China produces 109 million ounces of silver per year domestically. By restricting exports, they are keeping that silver inside China instead of letting it flow to international markets. 109 million ounces staying home, while they simultaneously buy everything available internationally. This is accumulation on a scale I have never seen in any commodity. COMEX, the main U.S. commodities exchange, has been draining at record pace. The registered silver inventory, metal available for delivery, has been falling month after month. Some analysts believe COMEX could face a delivery failure within 18 months if current trends continue. And who is on the other side of those COMEX withdrawals? Follow the shipping data, follow the vault transfers, follow the metal, it is going east. Here is a data point that should chill you. The global silver deficit last year was 67 million ounces. That means the world consumed 67 million more ounces than every mine on Earth produced. That gap was filled by pulling metal from vaults and stockpiles. Those stockpiles are running low, and now add China's planned $3 trillion deployment to a market already in deficit. The math does not work. It cannot work. There is not enough silver at current prices to meet this demand, which means prices must rise until demand is destroyed or supply is found. Neither is happening anytime soon. You guys are amazing. You have come this far with this much detail. Tell me in the comments, do you hold silver or not? And if not, has your thinking changed after this video? I genuinely want to know. Now I need to show you the end game, because everything I have shown you so far, the bond dumping, the silver accumulation, the export restrictions, these are all tactics. They serve a larger strategy. The strategy is simple. Control the future. Let me explain. The 21st century economy runs on three things: energy, technology, and data. And all three of them require silver. Energy? Solar panels are the fastest growing energy source on Earth. By 2030, the world will need 500 million ounces of silver annually just for solar. That is almost half of total current production. Technology? Every semiconductor, every 5G antenna, every electric vehicle uses silver. The tech revolution is actually a silver revolution. Data? The servers that store the world's information, the batteries that power them, the connections that link them. Silver is everywhere in that infrastructure. Whoever controls the silver supply controls the inputs for the 21st century economy. China understands this. I do not think America does. Let me show you China's solar dominance first, because this is where the silver strategy becomes crystal clear. China manufactures 80% of the world's solar panels. 80%. They control the entire supply chain from polysilicon to cells to modules. European solar projects use Chinese panels. American solar farms use Chinese panels. When the world went green, they went through Beijing, and every single one of those panels requires silver. The photovoltaic cells use silver paste as a conductor. No silver, no panel, no solar energy. China's solar dominance gives them control over the world's energy transition. But that dominance only works if they have enough silver. As solar adoption accelerates globally, silver demand from this sector alone is expected to reach 200 million ounces by 2030. That is nearly triple current solar demand, and it is coming from an industry that China controls. By hoarding silver now, China ensures they can meet their own solar production needs while potentially restricting supply to competitors. Imagine a world where Chinese solar panels are available and affordable, but American or European manufacturers cannot get enough silver to compete. That is not a trade advantage. That is industrial dominance. Now let us look at electric vehicles. Every EV uses approximately 1 to 2 ounces of silver. As the world transitions from gasoline cars to electric, silver demand will explode. China is the world's largest EV manufacturer. BYD alone sells more electric vehicles than any company on Earth. By controlling silver, China controls the key input for the industry. They are already winning. And then there is semiconductors. This is where it gets really interesting. The US has been trying to cut China off from advanced semiconductor manufacturing. The CHIPS Act, export restrictions on lithography equipment, sanctions on Chinese tech companies. America is fighting hard to maintain chip dominance. But here is what most people do not realize. Semiconductors require silver, not in huge quantities per chip, but the global semiconductor industry uses millions of ounces annually, and that demand is growing as chips get smaller and more complex. If China controls the world's silver supply, they have leverage over semiconductor manufacturing, regardless of what equipment restrictions America implements. You can have the best lithography machines in the world. Without silver, you cannot make chips. This is strategic thinking at a level most Western analysts do not even recognize. Let me connect this to the military dimension. Silver has unique properties that make it essential for defense applications. It is the most conductive metal on Earth. It is antibacterial. It has superior thermal properties. These characteristics make silver irreplaceable in missile guidance systems, torpedo engines, jet engine bearings, nuclear reactor control rods, advanced battery systems, communication equipment. China is in the middle of the largest military buildup since World War II. They need silver for their defense industrial base. By securing supply now, they ensure their military modernization is not constrained by material shortages. And if conflict ever comes, controlling silver means controlling a critical war material. Now let me show you the currency angle because this ties everything together. For 80 years, the US dollar has been the world's reserve currency. That means global trade is priced in dollars. Commodities are sold in dollars. Central banks hold dollars as reserves. This gives America enormous power. They can sanction countries by cutting them off from the dollar system. They can run massive deficits because the world needs to hold dollars. They can print money without immediate consequences because demand for dollars is global. China wants to end this. The Belt and Road Initiative, the Petro-Yuan, bilateral trade agreements in local currencies, BRICS expansion. Every move China has made in the last decade has been aimed at reducing dollar dominance, and silver fits perfectly into this strategy. If China accumulates enough silver, they hold a hard asset that has value regardless of what the dollar does. If the dollar weakens, silver priced in dollars goes up. If America prints more money, silver becomes more valuable in dollar terms. China converts paper dollars into physical metal. When the dollar's value inevitably declines from endless money printing, China's wealth is preserved. America's is not. This is wealth transfer disguised as commodity trading. Buy bonds for decades, accumulate dollars. Then, at the strategic moment, convert those dollars into hard assets and watch the dollar system strain under the pressure. The timing of this strategy is important. America is weaker now than at any point in recent memory. The national debt is $34 trillion. Annual deficits are $2 trillion. Political dysfunction is paralyzing. The Fed is trapped between inflation and recession. This is when you strike. When your adversary is weakest, you deploy your weapon. China has been patient for 20 years. They have been building this position slowly. And now, according to these reports, they are ready to move. $3 trillion into silver. Bonds dumped. Dollar weakened. Strategic material secured. Checkmate. After understanding all this, your mind must be spinning. Share your reaction in the comments. And send this video to your friends because this information should reach every investor. Now let me give you what you came here for, where this is going, and what it means for you. I am going to run 3 scenarios: conservative, base case, and full escalation. I will give you price targets, probabilities, and the assumptions behind each one. But first, I owe you the risks, because in a story this big, the risks matter more than usual. And I refuse to be one of those channels that only shows you the bullish case, the risks. Risk number 1, the $3 trillion report is exaggerated or fabricated. Chinese state media makes claims for strategic purposes all the time. Maybe this number is a negotiating tactic. Maybe it is designed to scare Western markets. Maybe it is pure propaganda. I accept this possibility. I have thought about it extensively. But here is my counter. Even as posturing, the fact that China's state apparatus is publicly discussing silver as a strategic weapon tells you where their thinking is. You do not posture about something you do not care about. And the Shanghai price at $102 is not posturing. That is real money from real buyers paying real premiums. Something is happening. The physical market confirms it. Risk number 2, de-escalation. If Trump backs off on China tariffs, if a trade deal emerges, if tensions cool, the geopolitical premium in silver could unwind. You might see a 15-20% pullback. But look at current trajectory. Tariffs are escalating, not de-escalating. Rhetoric is hardening, not softening. The EU just froze their trade deal with the US. Every major actor is moving toward confrontation, not away from it. Risk number 3, alternative technologies. What if someone invents solar panels that do not need silver? What if semiconductors move to different materials? Technology can disrupt demand forecasts. This is a real long-term risk. But in the near term, the next 3 to 5 years, there are no commercially viable alternatives. Silver's unique properties cannot be replicated easily. The substitution risk is real, but distant. Now the scenarios. Scenario 1, conservative, and 20% probability. Assumptions. The China reports are mostly posturing. Only 200 billion actually enters silver over 24 months. No major supply disruptions. De-escalation happens by mid-2025. In this case, silver still goes to $150 to $180. Why? Because the structural deficit of 67 million ounces has not been fixed. Shanghai premiums stay elevated. Industrial demand continues growing. Even the conservative case is a 70 to 100% move from current prices. Scenario 2, base case, 50% probability. Assumptions. China deploys $500 billion to $1 trillion into silver over 18 months. They continue restricting exports. Bond selling accelerates. COMEX continues draining at current pace. In this case, I think silver reaches $250, $350 by end of 2025. That is roughly a 3 to 4x from current international spot. It sounds extreme until you do the math. $500 billion of new demand into a $200 billion market, the price must rise to balance supply and demand. Scenario 3, full escalation, 30% probability. Assumptions. China deploys $1.3 trillion. Major supply disruption occurs, Mexico, Peru, or elsewhere. COMEX faces delivery issues. Speculators pile in. Central banks join the buying. In this case, you are looking at silver prices that break every historical model. $400, $500, potentially higher. I know how that sounds. I thought the same thing when I first ran the numbers. But remember, gold went from under $2,000 to over $2,800 in less than 2 years. Silver has not had its move yet. When it does, the percentage gains will be larger because silver is a smaller market with less liquidity. The same buying pressure that pushed gold 40% pushes silver 200%. That is not hype. That is market mechanics. What this means for you. I want to speak directly to you now. If you hold silver, what you own has transformed. 6 months ago, silver was a speculative trade on inflation and Fed policy. Today, it is a strategic asset that two nuclear superpowers are fighting over. That changes everything. Strategic assets do not trade on CPI data and earnings reports. They trade on fear, on scarcity, on the willingness of governments to pay any price to secure supply. And right now, China is demonstrating that willingness in real time. $102 on Shanghai, export restrictions, strategic reclassification, $3 trillion planned deployment. This is not normal commodity behavior. This is war behavior. If you do not hold silver and you are considering it, I am not going to tell you what to do. I never do. But I will tell you this. Every day that passes, available supply shrinks. China is absorbing everything they can find. COMEX is draining. The deficit is growing. The window to buy at current prices does not stay open forever, not because of hype, because of math. When supply runs dry, price becomes whatever the last buyer is willing to pay. And when that buyer is the Chinese government with $3 trillion, the word ceiling stops having meaning. The bottom line. Let me crystallize what I have shown you today. China has a secret weapon. It is a two-part attack. Part 1. Dump U.S. Treasury bonds. This weakens the dollar, raises American borrowing costs, and generates capital for the second part. Part 2. Buy all available silver. This secures the strategic metal China needs for solar dominance, technological supremacy, and military power. The endgame is control of energy inputs, control of technology supply chains, control of industrial capacity for the 21st century. This is not a commodity trade. This is the most important geopolitical resource story of the decade, and you are watching it unfold in real time. This is finance currency. Subscribe if you have not. Hit the notification bell so you do not miss what comes next. And please, go to the comment section and tell me, what time are you watching this video? What city are you watching from? And what is your name? I want to see the names of my beautiful and amazing audience. I read every single comment. I remember every name. You are all part of this journey with me. Share this video with anyone who holds silver, owns stocks, or cares about what is coming. Because what I just showed you changes everything. Stay sharp, stay stacking, stay informed. This is the hidden war for silver. And now you know.